But if the conventional wisdom is that we still have more to fall here in terms of where the equity markets are, I think the likelihood is that we're going to see interest rates go up. If that is the conventional wisdom, is there any argument to be said actually that you should be buying in this market? Because the conventional wisdom seems to always turn out to be the opposite in terms of when the buying opportunity actually is.
Well, so I think right now there's this huge temptation to call the bottom, and the conventional wisdom would tell you that we've gone down far enough, but maybe there's a little bit more to go. To Mike's point, we tend to overshoot on the downside. I do think there's a little more space that we could go down here. But yes, I mean, we've seen a lot of the contraction already. We've seen multiples come in quite a bit. You could start dipping your toes into places like tech, like high quality healthcare, like high quality bonds, but don't do it with the expectation that we won't see more volatility before the next 2 months is over. I do think that the second half of this year can be a lot better than the first half, but we have to get to it first. So if you must buy things, you can do it right now, but I would average in. And with a VIX at these levels, you can't have the expectation that things are going to just bounce off of a bottom and go straight up.
How do you look at the valuations today of what were the pandemic plays that did so well? There's so many people looking at those at the prices they are today. And of course, they're looking at where they used to be and they say, look, it looks cheap relative to that. But life is relative. And I don't know if those prices at their highs ever made any sense to begin with. And so how do you even begin to say, OK, this is a good entry point or it's still a terrible entry point?
I think a lot of those plays made sense in the environment we were in, which was very, very low rates and very, very little inflation. This is a completely new environment. So those valuations do not make sense anymore. And you have to think of it from a thematic standpoint. If we're talking about stay-at-home stocks, I don't think a lot of those make sense in this environment or going forward. When you look at what's going to happen in the economy and just the future of the American economy, there are still a lot of themes that can do well, but they're getting hammered right now, and we have to wait that out. So thinking about things like electric vehicles, cloud computing, the things that are really taking the brunt of it, yes, they're going to go through some pain, but they're also going to survive this. So those are some of the things that when you think about dipping into valuations that 5 years from now, we'll look back on this and they'll look like a great bargain. Think about the themes that will do well over the next 3 to 5 year period.